Well, it's countdown, and thanks so much for tuning in from both Agam and me. Mahindra and Mahindra has reported numbers, net profit at 1650. Don't look at the versus estimate number because there are some exceptional items out there in the M&M numbers, 137 crores of exceptional gains and maybe some more. But if you just look at the revenue numbers and the margin numbers, seems to be in line with estimates. Vineeta Sharma, Head of Research at Narnolia Financial Advisors, joins us right now on the show. Vineeta, good having you. Thanks so much for joining in. Your initial take on the numbers?
See, if we consider the Mahindra and Mahindra along with MVML results, the top line that we were expecting is a little lower than what we were expecting, around 12,800 crores, which is around 12,790. And even on the EBITDA front, margins were expected around 15.3% on the combined the MVML. But this is around, I can see it is around 14.5%, a little bit lower than what we were expecting. Yeah, already we were expecting a lower margin because the tractor volume had slowed in this particular quarter because of various factors. And the tractor margin is normally around 21%. That was around in Q1. And the farm equipment segment, that contributes around 32% to the total revenue. So if that margin, that volume and the volume contracts, definitely the margins will be under pressure. But PAT is definitely higher than what we were expecting, maybe because of other income. I'll have to do more of, number crunching and seeing the whole report, which I have not been through.
So, Vineeta, from what I understand, are you attributing the slight miss in margins on account of the slowdown in tractor business, considering it is essentially the tractor business that drives profitability for M&M?
Yeah, because, as I said, the tractor business margins is around 21%. And right now, the whole farm equipment segment, that is contributing 32%. The management is targeting of, increasing this segment revenue to 50%. In the next 3 years. But that's because of, lower volumes from the tractor segments because of rain deficiency in Bihar, Maharashtra, Gujarat, Andhra Pradesh, and also because of the weaker operating leverage is what I can focus that this kind of margin pressure must have been witnessed.
Okay. Vineeta, what does this do to the stock though? Because the numbers may be slightly lower than what you were working with. If I just look at the Bloomberg estimates, they seem, there is hardly a miss. 14.5, the estimates were 14.6, which was the consensus estimate. The consensus may think as they do. Well, what is your verdict on the stock now post the numbers that have come in?
See, overall, if you look at Mahindra and Mahindra and the kind of placement that the company is doing, if you look at the commercial vehicle segment, that has grown pretty good. The volumes were good. And even the passenger vehicle segment, that was a little down, but then we are seeing a lot of new products coming. We are seeing Marazzo, which is already there, launched. We are expecting another Alturas launch in somewhere around end of November. So these are there are new products which are coming, which should drive Mahindra towards better sales, and we are overall positive on the kind of segment that it caters. And even considering the valuations, I think it's a fair bet to have in a portfolio.
How are you reading the response from Marazzo going in, and also what would you like to know from the management as we move into the next, say, couple of quarters?
See, overall response from Marazzo looks good. There is 1.5 months waiting period for the segment, and but then definitely once you have more of launches that comes up, then obviously the other expenses, the ad expenses, and these are expenses will go higher, and that also should in a way contribute to lower margins in for a shorter period of time.
Okay. If I were to ask you, Vineeta, final question from my end, if I were to ask you for a pecking order of what would the auto space be, and what is it that you would look to buy post almost all the numbers that are out now with M&M being out as well, what would that pecking order be?
So in auto segment, see, we have the two-wheelers and the, you can say four-wheelers or the passenger and all together. So our pecking order in the four-wheelers would be Maruti and then Mahindra and Mahindra. And in the two-wheelers, we are liking Bajaj Auto.
All right, Vineeta, finally, a question on your valuations. How are you reading M&M on an absolute terms with the price at which it's currently trading at?
See, right now what I can see is, if as per our calculation how it goes, it is around 16 times FY20 price to earnings. And if you consider the listed space subsidiaries, they contribute around 300 or so valuation, considering some 20% holding company discount. So I think our valuation would be around 1,050 or so. That should be the target. I think, last 2 years, if you see, FY17, it was trading around 26 times price to earning with ROE of around 12.5 times. FY18, it was trading around 21 times with ROE of 14.5 times, 14%. So considering that, I think for FY20, our calculation goes around the ROE of 15.5. And that makes a P multiple at 16 times, which I think is not a very poor number to stay on.
Okay, we'll leave it at that, Vineeta. Thanks so much for joining in and giving us that perspective. Really appreciate your time. That's the view on Mahindra and Mahindra. The stock lying absolutely flat right now. What's not been flat? Actually, well, it has come off a little bit in the session today. What's also come off in the session